a company needs sufficient funds in order to repay the debenture holders. Sinking fund method is a method that helps the company to follow a procedure in order to make available the necessary funds at the time of redemption of debentures. When a company has to redeem its debentures, as we discussed, then the company should have sufficient funds in order to repay the amount on debentures. Sinking fund method is a method wherein a company sets aside a part of their divisible profit every year. Generally, the company ensures that an equal amount is set aside every year so that necessary funds are available at the time of redemption of debentures by adding up all the amounts set aside for all the years. It is like if you are planning to go on a trip with your friends after 10 months. You start planning to save your pocket money from now itself by saving a little sum for every month so that at the end of 10 months you have enough money to go for the trip. This is all about sinking fund method also. In the simplest of simple terms, the company knows that it is going to incur a huge cash outflow after a certain number of years. So, the company starts to set aside an equal amount every year. Now, when the company is setting aside a certain sum, it will not want that sum to be idle. Rather, the company would want that sum to grow. That is why such amount that is set aside is invested in marketable securities or bonds of other entities. Now we know the logic of setting aside a certain amount. But how does the company know exactly how much to set aside? That amount that the company needs to set aside and invest is worked out by using the sinking fund table, depending upon the rate of return on investments as well as the number of years for which such investments are made. Now, let us see the meanings of some technical terms in the sinking fund method before going on to discuss the journal entries. First, let us discuss what is debenture redemption fund. We saw that company must set aside some amount towards arranging necessary funds for the redemption of debentures. Such amount is ascertained by the use of sinking fund table, as we saw. This ascertained amount is transferred to a special fund from which it is further invested into marketable securities. This fund to which such amount is transferred is called the debenture redemption fund. So now we are clear what is the debenture redemption fund. We also know that the amount in the debenture redemption fund is appropriately invested in marketable securities. The investment that is made from the funds available in the debenture redemption fund is called the debenture redemption fund investment. These investments earn income. Such income earned from the investments made from the debenture redemption fund are reinvested along with the amount set aside for this purpose in the subsequent years. In the final year, the debenture redemption fund investment is encashed and the total amount available due to setting aside of amounts every year added by the interest earned thereon is utilized for the redemption of debentures. When the investments are made from the debenture redemption fund and finally encashed at the end of the final year, it results either in a profit or in a loss. Such profit or loss made on encashment of the debenture redemption fund investment is transferred to an account called the debenture redemption fund account. The purpose of creating a debenture redemption reserve is achieved if a debenture redemption fund account is created. Once the debentures are redeemed, then such amount is transferred to the general reserve in the balance sheet. Now that we saw the meaning of a few terms in relation to the sinking fund method, let us now take a brief look at the process of the sinking fund method and then discuss the journal entries in detail in the next video. In the simplest terms, the process of sinking fund is that a certain amount is ascertained which has to be set aside every year and invested in marketable securities. In every subsequent year, the income earned from such investment made as added by the amount set aside for that particular year should again be invested. At the end of the final year, all such investments made are encashed and utilized to redeem the debentures of the company. The profit or loss made on the investments is also appropriately accounted for. Now that we saw the gist of all this, let us see each step in the process of the sinking fund method. The first step to be done is to calculate the amount of profit to be set aside annually. This amount is ascertained with the help of the sinking fund table. Once the amount to be set aside is ascertained, then step 2 is to transfer such amount to the debenture redemption fund account at the end of each year from the first year to the final year. Once the ascertained amount is transferred to the debenture redemption fund, then step 3 is to invest such amount in marketable securities and debit the same to debenture redemption fund investment account. Step 4 is to then receive the interest on the debenture redemption fund investments at the end of each subsequent year. Step 5 is to repeat the same process of step 3 and step 4 every year except the last year, that is the year of redemption. So, step 5 is to continue keeping aside an ascertained amount for investment and collecting the interest earned on investment and reinvesting such interest also along with the amount set aside to be invested. Finally, when the same process is kept on repeating and the final year arrives, step 6 is to receive the interest on the investment for the final year. Step 7 is to keep aside the ascertained amount for the final year, that is the year of redemption. And then at the end of final year, step 8 is to encash the investments made from the first year up to the second last year. Now, the interest up to the final year is received. The amount to be kept aside is also allocated and kept aside for the final year, as well as all the investments are also encashed. So, the company has the funds ready for the redemption. Before paying off for the debentures, the company has to ascertain the profit or loss made on the debenture redemption fund investments. And step 9 is to transfer the profit or loss arising out of the investments made from the debenture redemption fund investment account to the debenture redemption fund account. Finally, the company redeems the debentures by making a payment to the debenture holders, which is step 10. And then at last, the balance reflecting in the debenture redemption fund account is transferred to the general reserve in the balance sheet. These are the transactions that take place in the sinking fund method, for which appropriate accounting treatment must be made by the company. Let us discuss the journal entries for the same in the next video.